If you missed everything that happened during today's session, don't worry, because we're getting you caught up on the only stocks you need to know about today. It is time for the top 10. And at number 10, of course, Hewlett-Packard. Shares are up about 0.5%. The company is going to provide an update on its efforts to rise above the sinking PC market when it reports its quarterly earnings at any moment right after the bell. Keep it here for full coverage and instant analysis of the results. Coming up, Adam.
Bristol-Myers jumping nearly 5% after Citigroup analyst raised his rating on the drug maker to buy from neutral. This is a big deal. The analyst says Bristol could be a big winner with a portfolio of cancer treatments under development. These cancer treatments go after the cells. They tell the cell to effectively turn off its ability to fight drugs. Really cool stuff.
Also cool stuff if you're a Saks shareholder. At number 8 is Saks. The shares are up 14% right now after rising 11% yesterday. Bloomberg News has learned that PE firm KKR is considering an investment in Saks and might push for a merger with privately held Neiman Marcus. That's according to people familiar with the situation. Both Saks and Neiman recently hired advisors to explore strategic options, including potential sales.
Well, at number 7 is Clearwire, down about 1%. The wireless service provider says it wants to accept Sprint's sweetened buyout offer made and is recommending that shareholders vote in favor of that. Sprint upped its bid for Clearwire yesterday by 14% to $2.5 billion.
Now here's a curious one. Merck shares are falling more than 1% today in spite of the fact that the drug maker reached a deal to repurchase $5 billion worth of its shares from Goldman Sachs. The agreement is part of a buyback program announced by Merck earlier this month. I suppose, Julie, that the takeaway is they're not going to be out there in the market bidding for the stock day after day. They did it in one foul swoop.
Well, this one's a little more straightforward. Target is down about 4% after the retailer reported first quarter earnings that fell 29%. It cut its profit forecast for this year. Higher taxes and cooler temperatures hampered sales during the quarter. And Target is the latest in a string of companies, including rival Walmart, that say bad weather and financial pressures squeezed business. And guys, analysts have been saying that, when you're talking about these discounters that cater to the middle income to lower income consumers, those folks are still hurting.
Right, and you heard the same thing with Walmart, also blaming weather and the taxes, the payroll taxes having gone up. It's hurting their bottom line as well.
Well, it's why Chairman Bernanke today is saying, I'm sorry, but the data is not good enough. We're not sure what we're going to do. We may keep buying, we may not. We need to see some payroll growth, and we're not seeing enough of it yet.
That's right, jobs growth. Okay, at number 4, though, Sony, down 3%. The Japanese company discussing a proposal to spin off its movie, TV, and music division, the entertainment asset. The idea came from U.S. billionaire hedge fund manager Dan Loeb, who wants Sony to concentrate on its core consumer electronics business.
And Pfizer, we're talking a lot about drug companies today. They're in the news. Pfizer up nearly 2%. The drug maker plans to split off the rest of its stake in Zoetis, the animal health unit it took public earlier this year. Pfizer is offering investors the chance to swap their shares for Zoetis stock in a tax-free transaction.
Pharmaceuticals and retail again here. Adam, we got a theme. Lowe's is up a little over 1% after the home improvement retailer said first quarter net income rose nearly 3%. Lowe's is beginning to see signs of improvement as the housing market turns around. And it's interesting here, Target citing that cooler weather, it has dampened demand for lawn and garden supplies. Wasn't enough to derail those Lowe's earnings entirely.
Okay, and related to this is number 1, the stock of the day, Toll Brothers, up nearly 3%, climbing to a 7-year high. The luxury home builder reporting the most orders since 2006 and profit that beat estimates. You can catch our full interview that we just had with CEO Doug Yearley. You can catch it all on Bloomberg.com.